The Bank of England has cut its growth forecast for the UK. It says it is expecting a sluggish economy as household incomes plummet while consumer prices rise at a faster rate. The bank's Monetary Policy Committee voted to keep its benchmark rate at a record low of 0.25% amid uncertainty about Britain's economic prospects as it leaves the European Union.
There is an element of Brexit uncertainty which is affecting the wage bargaining. Some firms are, potentially material number of firms are less willing to give bigger pay rises given that it's not as clear what their market access is going to be over the course of the next few years.
The bank cut its annual growth estimate for 2017 to 1.7% from 1.9%. and for 2018 to 1.6% from 1.7%. Price pressures in Britain have increased since last year's vote to leave the EU. The result of the referendum sent the pound sharply lower against the US dollar and euro, increasing the cost of imports into the UK. And the impact of Brexit is visible across boardrooms as well. A new survey shows wages for CEOs of Britain's top listed companies fell by 17% last year as boards reacted to political pressures. But their pay remains 129% above that of their employees, and it's workers rather than big bosses who are likely to feel the effects of rising inflation and interest rates the most. Sourav Roy, TRT World.
So let's stay in London now and speak to Kallum Pickering. He's the UK economist at Berenberg Bank. Callum, great to have you on Money Talks as ever. The BOE appears to be saying that they're pricing in a turbulent Brexit, and I'm interpreting Mark Carney's words there. But are they being overly pessimistic in this, do you think?
It's the opposite. In fact, the Bank of England are assuming a smooth Brexit. That's the point. That's the reason the economy is expected to grow at or a little above its trend for the next 3 years. Interesting, the commentary about how bad it is in the UK, I just don't see it, either anecdotally or on the street. Ask, would the Bank of England really be considering rate hikes if it were that bad? Surely it would be going in the opposite direction.
Indeed, but there are some in the city who have been saying that Mark Carney has been far too pessimistic in his outlook that he outlined earlier. Now, the pound, as a matter of fact, then fell to a 9-month low against the euro after that announcement. Are we likely to see even more downward pressure on sterling, do you think?
The downward pressure on sterling came today mainly because some in markets were expecting Andy Haldane, the chief economist, who had suggested a month ago he may vote for a rate hike. He didn't vote for a hike today, so the market was just reducing its expectations a little. But the major factor pushing sterling down at the moment is markets are pricing in the risk of a hard Brexit. Now, I think they've done all the pricing in of that risk they need. Over the course of the next 12 months, the risk of a hard Brexit will fall and we will see some more upward pressure on sterling. You would have to see an absolute disaster in the Brexit negotiations for sterling to go down in a major way from here. And that seems unlikely, probably 30% chance.
Indeed, but well, some people are predicting a rough ride ahead, though. What are your projections following these announcements by the BOE? Are you staying roughly where you are on your growth projections for this year and next?
Well, the Bank of England has revised its forecast down today to 1.7, 1.6 and then 1.8. That's broadly in line with the forecast I had before today. I'm at 1.7, 1.6 and 1.7, which is well above the average trend growth rate in Europe and about what the US is achieving. It's mainly a sentiment issue in the UK. The markets are taking a very negative view on the UK, but when all is said and done, the economy, despite the Brexit uncertainty, is actually holding up okay. I'd say if there was no Brexit, my forecast would be somewhere in the region of 2.5% this year. So we'd probably reduce growth by a third, but by no means is it the end of the world.
Okay, Kallum Pickering, Berenberg Bank, thank you so much.